If you've spent any time around trading forums, you've probably seen the term gap trading thrown around, usually followed by either strong opinions or confused questions. Today, I want to give you the plain English version. What a gap actually is, why it happens, and how it fits into a normal weekday morning. A gap is simply the difference between where a stock closed yesterday and where it opens today. Closed at $50, opens at 52, that's a gap up of about 4%. Opens at 48 instead, same math, just down. That's the whole concept. No complicated math, no insider knowledge required. Gaps happen because the market isn't actually closed overnight. It just stops trading on the regular exchanges. News doesn't take a break. Earnings get released after the bell. Companies announce mergers. The Fed makes a surprise statement. When trading reopens, the price has to catch up to all of that overnight information in one move. That move is the gap. This is also where pre-market trading comes in. Starting as early as 4 a.m. Eastern, a smaller pool of traders starts placing orders before the bell, and that, combined with overnight S&P and NASDAQ futures, starts to hint at where a stock is likely to open. Not a guarantee, but a pretty reliable preview. Okay, that's the textbook version. In my world, gap trading doesn't look like sitting in front of 6 monitors yelling at candlesticks. It looks like coffee. Most mornings, I get my coffee, sit down, and pull up my portfolio. I run one button, Tradeb4bell's morning analysis, and it crunches pre-market and futures data behind the scenes to give me a clean read on where each stock's likely headed, adjusted for how volatile that stock tends to be. From there, it's a simple read. Strong buy, hold, sell, strong sell. I pick the highest conviction setup, place one trade, and I'm done. Start to finish, about 10 minutes. I didn't always have it this easy. Before Tradeb4bell, this meant checking several sites by hand and doing the futures math myself. That's exactly why I built it. Gap trading, at its core, is just paying attention to the difference between yesterday's close and today's open. Put simply, it's using the information that's already out there to make a more informed call. If you want to see exactly how the tool builds that read every morning, the full walkthrough's linked right here. And if you want to try it yourself, Tradeb4bell.com is where to start.